Hello traders, this is Fawad Razakzada, market analyst for City Index. Today is the 30th of October 2023. I'm here to give you a quick market update. So the economic calendar is quite busy this week. We have lots of top tier economic data releases from around the world to look forward to, including the jobs report on Friday. But we'll also have a couple of key interest rate decisions to look forward to as well, including from the Fed on Wednesday and the Bank of England on Thursday. Both central banks are expected to keep policy on hold, which means that the key focus will be on the language. This makes the pound against the dollar the key currency pair to watch this week. The cable has been holding steady around the 120, 121 area, despite the fact we've seen further improvement in US data in the last couple of weeks, which suggests that the peak interest rate narrative is now perhaps fully priced in. So there's a possibility that the pound could start to climb higher in the event that US economic data starts to deteriorate, or if we see improvement in risk appetite. The key level to watch on the cable is at around 121.70-ish, which was previously support and resistance. That's a short-term level. The bearish trend line coming in at 122 area. And then the key level above that is this level right here at 123.08, which was the low back in May. So that level has turned into resistance on the retest from underneath. So a break above that level would be significant in terms of technical analysis anyway. The euro dollar has broken above this bearish trend line that had been in place for several weeks. It has started to find support at around 105 area, which was a significant support level earlier this year as well. So far, however, we haven't seen any upside follow through, with rates coming under pressure because of strength in US data and the lack of any positive news from the Eurozone. But there could be a case for rates potentially bottoming out here. We need to see the euro dollar climb above the 21-day exponential moving average, which is kind of flattening around the current levels of 105.90-ish. A move above that, a decisive break above that level, could pave the way for last week's high at 106.95. And thereafter, we have the 200-day average coming in at 108.10. Global equity markets have been coming under pressure, as you can see on this monthly time frame of the DAX index. Right now, the German index is testing a key level of support at around 14,600, this level right here, which had been strong resistance in the past before it broke above it earlier this year, bounced there once back in March, and now we're testing that level again this week. So could the DAX bottom out here? It's possible, but a lot will depend on the general direction of risk appetite, which has been hampered in recent weeks owing to raised geopolitical concerns, high interest rates, and concerns about high valuations in the US especially. Let's see if the DAX will find support here as it is testing that long-term level I mentioned. It needs to create a higher high above last week's high at around 15, just below 15,000. That level is now really important in terms of resistance. A move above that could be significant in so far as the short-term trend direction is concerned. Now we have more earnings to look forward to this week, as my colleague Joshua has written in his preview. We've got Apple, AMD, and UK oil stocks, among others, to look forward to. The details all in this article, so please do check it out. Apple earnings means the Nasdaq will remain in focus following last week's tech earnings. The Nasdaq finally broke down and took out support at around 14,550, the level I had mentioned in one of my previous videos. This level is now going to be the most important resistance level to watch moving forward. Could we see a retest of that level this week? It's possible with all those macro events and key earnings to look forward to. For more analysis, make sure to check out the news and analysis section at cityindex.com.